so many people participating this afternoon. Before I invite my fellow panelists to join me, just to say that we very much would like questions from any participant today. So please write in your questions if you have any, and they will be relayed to me, and we'll, as a panel, do our best to answer your questions. So let me ask the panelists to join me. First of all, Oleg Tymkiv, Strategy and Finance Director of DTEK. Oleg, please.
Thank you.
And secondly, Braian Best. Braian is Managing Director of Investment Banking at Dragon Capital. So, Oleg and Braian, thank you very much for joining us this afternoon.
Thank you, Sean.
Maybe we could start by each of you giving us a short introduction of yourselves and also the current kind of strategic priorities in relation to investment and M&A in relation to your organisations. So, go ahead.
Clockwise. Okay. Hello, everybody. My name is Oleg Tymkiv. I'm Director of Strategy and Finance at DTEK, as Sean mentioned. Prior to that, for over 20 years, I was competing with you guys here in different shoes when I was with PwC, dealing primarily with advisory services, including M&A. So this topic is very interesting, and thank you for inviting me to this panel. Really interested indeed. In my current role at DTEK as Director for Strategy and Finance, we really look probably more into investments as such, into greenfield, brownfield, including M&A, but we actually look wider than M&A, and we probably later talk and discuss different topics and priorities, but we do see some opportunities in Ukraine coming from M&A angle in the energy sector. Not surprisingly, you haven't seen energy in the presentation and on the radar, and that's not surprising because we didn't really have any transactions last year. Hopefully next year we may see some, as if the government decides to privatize the energy distribution companies. We would also want to see some investments into different areas in our segment, like into renewables, but we will talk about it later.
Good, thank you.
Yeah.
Right.
So, thank you for inviting Dragon Capital to participate in this event. This is our second or third time participating, and you guys do a fantastic job putting this M&A Radar together every year, so we're happy to participate. My name is Braian Best, and I am the head of investment banking and managing director for Dragon Capital. I like to describe Dragon as a sort of plain vanilla full service investment bank. So we don't do anything very exotic, but most of the activities that we're involved in you see in most global investment banks. So we participate in trading fixed income and equity securities. We have a large research department that supports that effort, and our sales team in regards to selling and trading securities. And then behind that, we have our investment banking department, which is what I oversee, and we supply product sometimes to the sales and trading desk in the form of capital markets transactions, but we also have a large M&A practice, which is what we're here to talk about today. And then to the side of that business, we also have an asset management business that's grown extensively over the past several years. Many of the deals that Svitlana presented in her opening remarks are deals in our private equity portfolio. So we'll be happy to talk about those today as well.
Okay, great. Thank you, Braian. So obviously one of the key messages that we're hearing from the Radar survey is quite a dramatic reduction, at least in value terms, in terms of the transactions that were conducted in the Ukraine in 2020. And I'd like to start by exploring your views as to how, with hopefully some getting through the pandemic to some degree in 2021, but also in the context of some of the headwinds that Svitlana was explaining, around the renewables situation with debt, around situation with IMF, etc. How are you thinking about how that might unwind in 2021, and I guess maybe a bit beyond that?
Sure. Well, I think that the 5 points that Svitlana mentioned in her headwinds were spot on. I think those are the key issues that we're facing in terms of M&A activity in the country going into this year. COVID has definitely had an impact on M&A activity because, especially in terms of cross-border activity, because a lot of companies that are interested in acquiring a target here were unable to physically travel to Ukraine and do their own due diligence and have face-to-face meetings with the target. So that meant that a lot of the activity was locally oriented, and that also means that the deal sizes were probably smaller, partially because of that reason. So I think that's certainly one aspect that has impacted the M&A activity this year. There were several deals in the pipeline last year, mostly capital markets transactions centered around renewable energy. My colleague's company was able to do one last year, but there were several others that were in the pipeline, and I think that the debt overhang with the guaranteed buyer did impact and did discourage a few of those companies going to market because the cost of that debt was higher than what we would have hoped had that debt not been present. So, there and the other things that she'd mentioned, the pace of reforms, the rollback of some of the anti-corruption reforms that we saw post Maidan. I think those, obviously, that's not good news for investors. Investors are looking for a move and large steps forward in those areas to give them confidence that they can come here and transact in a transparent and corruption-free environment. Without that, it doesn't mean that there won't be transactions. The transactions will just be fewer and farther between.
Yeah, I understand. And Oleg, can we ask you to talk a little bit about renewables in particular? I mean, how do you see that playing out in the context of the issues that we face here?
Yeah, well, there are several factors which impact how attractive or less attractive renewables are, and Brian mentioned one of those, which is the payments. So for those who are basically not that close to the sector, the way the sector works, the state guarantees a certain tariff for green energy, which is fixed in euro, and the state is supposed to buy all that energy from you and pay. So the P&L looks great, but then the state does not or didn't pay on time, or didn't always pay on time in 2020. So it was all nice till March, then starting from April through basically July. The payments went down to 3% of your total revenue generated. So the P&L is good, the cash flows are non-existent. Mm-hmm. And what it led to, in particular, from investment point of view, Fitch, for example, downgraded our rating, DTEK renewables, from B to B minus, or watch negative, for no reason under our control, purely due to low payment or non-payment from the guaranteed buyer. And then all the industry players renegotiated with the government, basically, and signed something which is known as a memorandum, when the parties agreed, okay, fine, we decrease the tariffs relative to what was in the law, but you start paying. That was the hope, at least. And you repay all debts which have accumulated. So the payments improved. Starting from the autumn, the payments improved with certain delays, but we are getting 100% payments, but the debt is still there. Whatever was accumulated is still there. So does that improve attractiveness on a net asset basis? Of course not. But that's kind of more maybe on the negative side. But we see certain positivity. There are several factors. One, all the global trends about CO2 emissions, the decrease. Ukraine is part of the global network. So that's all present. The cost of capex per unit of electricity produced from green, solar, and wind, it goes down. It goes down every year. And now even something which we call levelized cost of electricity from renewable sources. So if you take OPEX and CAPEX on a replacement basis, it's already cheaper in solar and wind than nuclear and thermal. So, and the Ukrainian power plants are getting to the retirement age. So we have several trends which improves the efficiency, the attractiveness of the sector. So with all those negativities which we saw in the past, we do remain optimistic. And maybe you read in the newspapers that we have recently announced that we are going to build another project, a 126 megawatt wind project in Ukraine. So we do remain optimistic. Yes, it is more difficult to raise finance. You cannot do it really locally. With our rating going down, it's more difficult internationally, but we do remain optimistic.
I guess in that context, in the positive side, we've seen quite a huge amount of global appetite for renewable investment. And we saw that in the recent offshore licensing round in the UK, for example. So is it the case, is it your view that if this situation was resolved, you would see quite a lot of capital, including overseas capital, really with good appetite for Ukrainian investments?
We would wish it happens. I think you need to dive a little bit into the structure of the sector, and we had something called the green feed-in tariffs, the green tariffs, and provided you have your project basically registered by the end of 19 and finish the construction by 2022, you have those green tariffs guaranteed by the state, and hopefully with a good payment rate. Many projects were put on hold. We had many projects approved. We put everything on hold in 2020. We do need, if we, for example, if we implement all our plans, and some of those have been published, some of those are still in our heads, we would need a lot of capital. Something comes from the equity. So if you look into the structure of the sector, it's maybe 60 to 70% debt versus equity. So something comes from the equity, something comes from the debt side. We do wish the climate to improve because we have a lot of plans to finance. In terms of equity players, hopefully yes as well. We are positive.
Okay, good.
I think we would see upwards of $2 to $3 billion of new capital enter the market if that particular issue was resolved. Mm-hmm. It's definitely the overhang that's keeping investors at bay currently. So, in my view, it seems to like a no-brainer for the country if you want to attract foreign investment into this particular sector. Then resolve the debt issue. And I think that there are ways being discussed now how to resolve that. If that were to happen, I think you would see several of these companies going to the market and raising fresh debt and equity capital.
Yeah, understood. And Brian, can I just go back to the point you were making about the logistical difficulty or impossibility of doing transactions in the COVID environment? Does that mean that there's generally a level of pent-up demand in terms of a backlog of deals that people would like to do, cross-border deals that people would like to do in Ukraine, that we'll see coming through later this year?
Generally, yes. We last year saw actually a pickup in the number of deals mandates that we signed to do transactions. Versus 2019. So we saw a pickup in the number of mandates signed, so companies wanting to transact in M&A or in capital raisings. But those deals were, it was difficult to get them completed. We talked about not being able to come cross-border to do due diligence. That's just one example, but I think a lot of the sellers and buyers alike were questioning whether or not it makes sense to wait to see what the results on the macroeconomic level we're going to be before pulling the trigger on a major transaction. I mean, to a lot of these buyers, it could be the first time making an acquisition. This is a huge undertaking for a company to do. An example was Svitlana in her opening remarks commented on Data Group buying Volya. Well, Volya is 2 times bigger than Data Group. So for Data Group to make that bet and to buy Volya, well, that took a lot of confidence in where everything was going. Mm-hmm. So, I think that yes, there is going to be some pent-up demand. Our expectation is that 2021 will be a better year than 2020 for sure. Yeah, the bar was set pretty low last year.
Yeah, and just one last question, Oleg, to you in relation to COVID. Has this whole episode, how has it changed, if it has changed, DTEK's general approach in terms of business, investment? Has it had any long-term implications to how you think about building your businesses going forward?
It definitely had a huge impact on us in different areas. The actual work, the way we work, the way we operate, and especially back in April when we were still learning how to work, how we came up with certain ideas like capsuling the teams so that there is no transmission of disease, work from home remotely. That had a big impact. We have learned how to deal with that. On our business side, we provide electricity for the economy to work. If the economy goes down, if the industrial consumption goes down, we do suffer as everybody. And for example, in 2020, we did something which we didn't do before. We revisited in April. We revisited our business plan, which we set 2020 business plan, which we set in December 19. So whatever we planned for in 19, in many areas became irrelevant. So we had to revisit. Added to that, we had impact of the changes in the industry. The way the industry operates, our industry operates, started to change in 19 when the rules of the market started to change. So it all added complexities to where we were when the pandemic came. But definitely, we are part of the economy. When the economy suffers, we suffer.
Yeah. And Brian, how are you thinking about real estate going forward?
Well, as I'm sure most people watching this today have seen in the news, I mean, a big portion of Dragon Capital's investment over the past several years has been in real estate, and I think our expectations were that 2020 would be a lot worse than what it actually was. We were probably we were at 100% on logistics and warehouses. We were probably down, up to 20%, I guess, in retail, maybe 15 to 20% in commercial. I don't remember the exact figures, but something like that. I think that it could have been much worse if the government if they decided to close down the business and the lockdown during the holiday period. It could have been much worse, but they left it open, thankfully, and that I think kept a lot of the retail establishment working properly. So our guess is and again, nobody's an expert on the future. But our guess is that this, work from home trend, which has been nice, I think for some people it's been a bit of a novelty. It's kind of fun to work from home, at least half in your pajamas and half in your business attire. But after a while, I mean, we're social creatures, and we want to interact with our colleagues. Our belief is that people will come back to work. Maybe not 100%. Things will change, of course. We will use technology more in our meetings, but office space is going to continue to fill up, and it's going to continue to grow in the country.
And maybe with some opportunities around commercial space, with warehousing, as you say, and
That's right,
delivery, etc.
Warehousing was, we maintained 100% occupancy throughout the crisis in our warehousing. It was a fantastic performer for us. So
yeah,
we were very happy with those investments.
Yeah. Okay. Good. Thank you. The next topic I'd like to explore with both of you is the recent announcement of the investment agreement with United Arab Emirates, and I believe that both Dragon and DTEK were part of that. So could I ask each one of you, maybe starting Oleg with you, and how do you think about that as a development, but also as to what that might mean in terms of financial investors, sovereign wealth funds, not only from the UAE going forward. So how do you think about that?
What we signed, when was it, a month ago?
A
month something ago. We went to the Emirates together with the president of Ukraine as a part of the larger business team, and we signed a memorandum of understanding with Mubadala and Masdar. Mubadala is one of the sovereign wealth funds in Dubai, and Masdar is its, if I may say so, new energy arm, fully owned by Mubadala. So what we did, we signed a memorandum of understanding to explore opportunities of cooperation, both in renewables and non-renewables area in Ukraine and outside. Masdar is pretty experienced, and Mubadala, they're pretty experienced in the energy sector. The Middle East overall is very experienced in the energy sector. So what we want to do, we want to learn from them, their experience, and what they have learned, how to expand overseas, how to work in other countries. We hope that they will be interested to invest into Ukraine, and we do hope we may have some joint projects in Europe. So we are analyzing different projects. So we are probably at the start of hopefully a big cooperation. But that's a large fund, a good investor with experience overseas. So looking forward.
And do you see interest from other sovereign wealth funds so far?
Not that I can recall over the last 12 months. Not over the last year. There were different discussions prior to pandemic, before. Sovereign wealth, I cannot easily recall.
Mm-hmm. Brian?
I think it's still early to tell. I mean, it was just a memorandum of understanding that was signed. There's an intention to look at deals, but I think that's a good starting point. There's still a lot of work to be done before money from these sovereign wealth funds enter the country. I like to see sovereign wealth funds interested because they typically invest in larger infrastructure type projects, and that's the foundation for a working economy, is to have infrastructure, roads, ports, airports, etc. I mean, you need to have all these things functioning in order for an economy to prosper. So if they show an interest and they do invest and they invest in large projects, that's obviously a big plus for the entire economy. So we like to see it, but it's still early. Right now it's just a memorandum. Let's see where we get. There's always been interest in Ukraine. People know that this country has a lot of potential.
Mm-hmm.
Now they have to do what it takes to get those sovereign wealth funds to invest here.
Yeah, for sure.
I would add to that, though, that I think that Ukraine has to do a better job of selling itself. And this is something we've talked about for many years, but I think it's really important, especially when speaking about sovereign wealth funds. These sovereign wealth funds could easily invest in Poland as well. So why would they invest in Ukraine? It's a higher risk country, so Ukraine has to give a little bit more. They have to, spend a little bit more to attract to bring these sovereign wealth funds to the country. You remember when you're British, right?
Yeah.
So you remember when Range Rover Jaguar was looking for a new production facility in Eastern Europe, and they were torn between Poland and Slovakia. I mean, those countries spent billions of dollars to attract the Land Rover Jaguar to their country. And in the end, Slovakia won because it has a huge impact on the overall economy. So Ukraine has to take that same approach. They have to look at the country as we're selling our country to investors. We need to get them here. What do we have to do?
Yeah, absolutely, absolutely. Just looking at some of the bright spots, if you will, in terms of the radar survey, and Svitlana was explaining about IT and technology, and quite a few, well, at least in terms of numbers of deals, quite a few. So, Brian, do you see that as a source of further M&A going forward, IT in the IT sector?
I do, and I think it's great for the country because a lot of the IT businesses that we're seeing activity, these are not just Ukrainian companies. I mean, their roots are from Ukraine, but these are now global companies. And I think the more these companies that go out to the market and do M&A or maybe IPOs and tap the capital markets, I mean, that's just another signal to the world that Ukraine is open for business. There's a lot of great companies here. There's a lot of great opportunity. I think that this is a potential bright spot for the country in terms of its future. Get these protect these companies, support them, help them grow so they can, go out to the global market. And I think this year you'll see some big names going global.
Yeah.
In terms of M&A and capital markets.
Yeah. And do you think there's another kind of development challenge in the sense of people understanding that IT here is much more than outsourcing, that it can be going up the value chain?
Exactly. Yeah, I mean, that is what we're starting to see. 5 years ago it was mostly outsourcing. But now even those outsourcing companies that were purely outsourcing a couple of years ago, now they're doing more product-oriented development and taking interest in some of the product that they're developing, and even reverse merging into some companies in order to move up the value chain. So I think we'll see more of that, and again, only positive for Ukraine in that respect.
Yeah. Oleg, do you?
And the more bright spots, as Brian mentioned, the more those spots we have, the better. It adds to the bigger picture. It brings Ukraine to the investors' map, to the radars, if I may use that analogy. So the more transactions we have, the more IPOs we have, the better for everybody.
Yeah,
I totally agree.
Yeah. Just to ask you about another topic that was mentioned, privatization. I mean, in many countries that I've had experience in, governments talk about privatization, but it stops and starts and never quite gets going, or takes much longer than people might expect. So what are your perspectives on privatization as it relates to Ukraine?
In terms of talking,
yeah. I mean, I think, well, I hate to say I gave up on privatization a few years ago, but we were. Look, I think that in terms of privatization, there are two things that are important. One, you want to get the government shouldn't be managing businesses. The government should be governing, and the private businesses, for the most part, should be private. And the other thing is that it's one way of really getting rid of corruption. State-owned enterprises and government-owned entities are less than transparent. If you were to, a few years ago, and I guess it was 2015, Dragon Capital together, was it with maybe with PwC, one of your firms, you're working with PwC, and when you were with KPMG, I guess we did a publication called Top 100.
In 15.
Yeah, in 15. That was with PwC, right? And it was an interesting exercise because when over 3,700 state-owned companies.
Wow.
And when you analyze the balance sheets and the cash flows, you understood how much leakage there was in the economy, how much of taxpayers' money, the citizens of Ukraine, their money goes out to these companies in the form of losses. So the faster the government can get rid of them, the faster we can get control of the wealth of the country.
Yeah.
Added to that, all management time and everybody's time involved in the management. So, in our sector, if you look into the structure of the sector, on the generation side we have nuclear, which will probably never be private. We have Centrenergo on the generation side, and I think it was up on and off the privatization list for so many times. I don't think it's on, but what could be on is the grids companies, the distribution companies, and we have six more grid companies which are still state-owned, fully or substantially state-owned. I'm not sure when they will be announced for privatization, but probably once they're announced, once the privatization is announced, those could be attractive targets, especially in the context of the recently adopted something called REP tariffs, incentive-based tariff setting process, as opposed to cost plus, which we had before. So that those tariffs are effective from 1st of January 2021. So the economics of the grids companies is much better now. So the structure, the geographically, on the country basis, they're quite fragmented. We have eight owners of the grid companies, including the state, including DTEK. So there could be some consolidation of the industry, plus hopefully privatization. If that's announced, this could bring local and hopefully foreign investors. But we need to fix all other things for that to happen.
Yeah. And unfortunately, I think you'll probably agree that every year we put off privatization, the less value those companies retain. And so the sooner they do it, the more value.
The capex needed, and I mean that's another discussion, a much longer one. The capex needed in the grids, in generation, is huge.
Yeah,
it's huge.
Exactly.
So, and under the price system and cost plus, there was just no incentive.
Yeah.
Now there is incentive, but you need capital.
Yeah.
You need equity capital. You need fresh equity. You need debt. And we discussed how easy or difficult it is these days.
Yeah.
Absolutely.
But a huge amount of political, will to really make that happen against potentially vested interest.
Looking back over 25 years, not sure whether that's really Political or whatever will it is, or
it's
just
political.
lack of.
It's definitely political. I mean, you need to have political will to privatize state assets.
For sure.
No question.
For sure. And another topic that was mentioned was public-private partnerships. So maybe if we could start with the energy sector, how do you think about that as a structure that can be used going forward?
It's quite difficult to say. I cannot immediately recall any discussion about PPPs in the energy sector. What definitely exists, or what we need in the sector, is very close cooperation between business and the government. This sector it's a market sector, but on the other hand, it's a very heavily regulated sector. So we do need a lot of cooperation with the government, with the regulators, with the legislative arm for the sector to work properly. PPPs, as opposed to roads and other infrastructures, I cannot easily recall any discussion.
Mm-hmm.
Given nuclear, can see Centrenergo maybe privatized at some stage, grids privatized, to be privatized, coal goes down, sunset industry. No, can't really.
I think that there is a role for public-private partnerships, for sure. As I said in your last question, the government shouldn't be running businesses, right? So that they should be governing. But there are certain circumstances where there's a strategic asset that you don't necessarily want to sell, but you also don't want to use up management time and government resources to manage it, because you're not the most efficient resource to manage a particular asset. So ports are a great example, airports, seaports. The government may not want to sell all of its government seaports, but it certainly could sell a concession to somebody that's professional in managing a seaport that would invest in its development and would pay the government a rental payment or concession payment on an annual basis so that there's some cash flow from it and it stays on the balance sheet of the state. Mm-hmm. So I see cases where public-private partnership makes sense. But again, it comes down to political will. Are you ready to give the management of those assets over to a private party? For some, unfortunately, the cash flows to the state organs is too great to let go. Yeah. And so I think that it's a matter of political will, but there's certainly a role for it.
Yeah. So going back to maybe some of your earlier comments, how optimistic does Dragon feel about 21 and maybe 22? I mean, how do you feel about that?
I think we say the same thing every year when people ask us, our outlook on the country. As I mentioned, there's no expert on the future, right? But I would say we're cautiously, optimistic, moderately optimistic, because we have quite a bit of investment that we want to make in the country as a company. We see an increasing number of foreign strategic investors taking an interest in Ukraine across different sectors. Svitlana mentioned agriculture, which will continue to be a powerhouse sector for Ukraine. This will always be an agricultural country, and it's a leader in a lot of respects in agriculture. So we will continue to see opportunities there. And IT, as we just discussed, is the bright spot for the country. But I think infrastructure is a huge possibility, and there's so much that can be done in this country that as long as the investors basically are simple people. They want predictability. They want stability. Give them those things so that they can project a future cash flow and a rate of return on their investment. They will come and invest. So I think that's what we're looking for, and I think we're getting there. It's just the steps we're going in the right direction, just maybe not as fast as we had all hoped we would go.
Yeah, and do you think that the change in administration, the new president in the US, can help or not help to play a role in unblocking some of these topics? That
it's a good question. I was talking with somebody about that this morning. I think that it's a bit of it's almost a double-edged sword. On the one hand, we all welcome President Biden in America, and we like his relationship with Ukraine. When he was part of the Obama administration, I mean, they were very supportive of Ukraine's efforts, and a lot of those people that were part of that team under the Obama administration have moved into the Biden administration and have already sort of taken a hawkish approach to Russia. But as you got somebody poking the bear, so to speak. You don't know who the bear is going to bite, after being poked. So I hope that it doesn't, create some new conflict as a result. That's the other side of the double-edged sword. Overall, though, I think it's a positive for the country.
Yeah,
to have somebody, like America supporting the country's efforts, and I think if America is supportive, then a lot of the European countries will also be supportive as well.
Yeah. And Oleg, how optimistic are DTEK in terms of the next year or so?
Well, where should I start? I think a year ago we developed a strategy, a 10-year strategy, DTEK 2030, and we wanted to announce it in April, and we announced it in December, and you can read it on our site, on our website. And we are moving along that strategy. We have certain goals. We may go faster, we may go slower, we may go straight line, we may go a little bit in curves, but we are optimistic that we are moving along, moving towards achieving our goals as we set it. And on a more narrow basis, in 2019, we were first in Ukraine to raise green bonds. We raised 325 million euro for renewables construction. And we only used just over half of that back in 2019, and we are sitting on over 100 million euro in cash for renewables projects. And back in summer, we were thinking, like, what shall we do? We pay interest, and that's expensive. That's expensive to finance European projects for us. So shall we return the money? Shall we? And these were serious discussions at the board level. What to do with money? Shall we just return? And then the door will be closed. You probably will not be able to raise it again. Now we are more optimistic. We have announced a project which will use up all those green bonds and will take some more equity. We have some more ideas in different stages of development for Ukraine, for international. So we are cautiously optimistic. We continue to invest. We can continue investing in Ukraine, and we are looking outside of Ukraine as well.
And another question around the experience of the last 12 months. I mean, obviously different sectors have been affected in dramatically different ways, but does that increase the way or the focus that you as a group have on contingency planning in terms of downside planning? Does that change the way you think about that, more focus on that topic?
Yeah, absolutely. And the reason I thought, I just reflected on so many things which happened over the last year. And at the group level, we planned and meant, and the idea was to be more of a strategic holding company. What pandemic did, what the crisis did, we are much closer integrated with businesses in terms of helping, basically in terms of firefighting, in terms of crisis management. We didn't mention today, but one of our group companies, ДТЕК, is going through debt restructuring, $2 billion almost in debt restructuring, and we have reached agreements with our creditors. We are now we are now basically processing the papers, and hopefully that part will finish soon. But that took a lot of attention from kind of the central team. When we had to suspend production of coal back in, was it April, May, part of June, at our coal mines. Of course, I mean, this was a very hands-on management, working with the group companies and the whole head office. So in terms of challenging, absolutely, we want to step aside and kind of go back into strategic management. But now, until we are out of crisis, I think we'll be more, like, my role is more kind of on the finance side as on the strategic side, as luck would have it. That's just life.
Yeah. And Brian, from Dragon's perspective, has the last 12 months changed your views on the relative attractiveness of different sectors or characteristics of a business? Would you look at things differently now than you might have done this time last year?
Yeah, I think so. I think that you go through a year like 2020, it changes your perspective on a lot of things. But our business has always been, we take a very much a risk-based approach to our business. So we're always evaluating, risks, and I think that that's one of the cornerstones to our success in a country like Ukraine, that has historically been very volatile, is that we've managed those risks very, very well. And so we treated 2020 in the same way. We were quick to manage our costs. We were quick to change the way that we look at our proprietary investing on the equity on the public side, and then I think that we'd probably, I don't work in the private equity team, but I'm quite certain that they changed their focus in the way that they're investing, and changing their priorities a bit, maybe shifting the weights and the types of real estate ventures that we were going into, but we're always managing risk and making changes to our strategy as a result.
Yeah, because I mean, from the perspective of KPMG, if I can talk about our business for a minute, I mean, it certainly has demonstrated to us that there's a whole bunch of costs that we were incurring on an ongoing basis that weren't value adding around travel, and we will optimize our, as I mentioned to you, Brian, we will and are already optimizing our profit portfolio across the world, and we definitely will increasingly focus on downside planning, contingency planning, finance resilience, etc., etc. So I think it definitely has put a different perspective on the way in which we think of our business. We still want to grow, will grow, but that risk focus is definitely ratcheted up significantly.
There was a very famous presentation by Sequoia Capital Partners, private venture capital fund out of the San Francisco Bay Area, and they gave this presentation to all of their portfolio companies in 2008 after the financial crisis, and the opening slide was a picture of a butcher and a big piece of meat, and he was cutting the fat, and I think that was the signal and the message to all of them was, the first thing you need to do in a crisis is control your costs. Yeah. And I think the most successful companies and the companies that come out of a crisis year the fastest are the ones that took action on the costs and the risk side early on.
Yeah, absolutely.
But you shouldn't stop thinking about the top line as well.
No,
because things will take ages to recover. I mean, if you lose from prior crisis from 98, 2008 and 14, so if you miss a year, it will take ages to pick up, to make up for that gap.
Absolutely. So, gentlemen, it's been a really, really great conversation from my perspective. Any final observations, thoughts on the survey? Any thoughts for our audience, or do you think we've covered the main points?
I think, I think the survey is fantastic. You guys do a great job. The problem with Ukraine and surveys like this, because these surveys are very difficult to put together. I can only imagine, because deals in Ukraine are easy to announce. They're difficult to close. And so there are a couple deals that were on the survey that actually haven't closed and may not close, but they were announced because it's just the nature of business in this country is that every transaction is a difficult transaction. Yeah. There's no easy way to do it here.
Absolutely.
It's thank you for the survey. It's from my point of view, it's very interesting and useful to see, kind of step aside and see a wider picture than your kind of, to some extent, narrow industry focus. Looking forward to what we'll see on that screen, or hopefully in a different environment next year. How the M&A landscape will change. Hopefully we'll have more industries. Hopefully we'll have something in the energy sector as well. But that's been quite interesting and helpful. Thank you.
Okay. So thank you, Oleg. Thank you, Brian. Thank you to our participants. I hope you found this session interesting. As Svitlana mentioned, you can access online the survey through the QR link. So that concludes our session today.